Hey guys, this is Kurt Monday from the Investagram team. Welcome to our new video about GME and the short squeeze. In this video, we're going to see something that has been requested by many of our subscribers. I'm going to answer the most frequently asked question about GME, that being, when is the short squeeze likely to happen? We are aware that a high short interest implies a chance of a short squeeze if the price of the shares reaches high enough. The congressional hearing, along with Wednesday's Gamma squeeze, turned out to be a great catalyst for GME to begin surging again, but we peaked at $200. For truly triggering the short squeeze, it looks like there has to be a much stronger catalyst. Today, let us look at a certain date where there could be a catalyst that is much stronger than anything that we have seen in GME. This catalyst has 7 different things, each of which indicates a huge price surge on the exact same day. I'll cover all 7 of these indicators in this video, and also when they happen. The details given in this video are based on analysis and speculation. It is not financial advice of any kind. Do the fact-checking part of this speculative theory. Remember that you are responsible for any decision that you make based on this speculation. Having said that, let's now get into the reasons why this catalyst has a great potential of triggering the GME short squeeze. The first indicator is Machine Learning's artificial intelligence forecast based on MarketWatch's CSV file. Taking a look at the historical data, AI forecasts an opportunity for the share price of GME to take off seriously around the same date when all the other indicators are also predicting bullish trends. The second indicator of when the short squeeze will happen has something to do with naked short selling. According to reports, there was a short volume of 33 million shares in a single day. As per theory, these shares were naked short positions occupied by hedge funds to slow down their momentum and prevent the gamma squeeze from continuing. The proof that supports this theory is the day when there was a short volume of 33 million. Statistics had also indicated that 0 shares were available for borrow that specific day. As per theory, the verdict is that the 33 million shorts must have been traded nakedly. However, this is only a theory, and there could be possible explanations other than naked short selling. You will need to decide yourself what you believe is true. However, if it is the fact that they nakedly short sold GME, it would imply that these naked short positions have to be covered soon. Market makers like Citadel have 21 days to cover a naked short position, and 21 days from the day they supposedly shorted 33 million shares naked would bring us to them being compelled to purchase and cover 33 million GME shares by the same day when all the other indicators are due. The third part of the catalyst is the result of hedge funds shifting their short positions from GME to ETFs. The ETF the hedge funds shorted the highest is XRT. XRT releases its dividends once every 3 months. When XRT holders receive this dividend, it implies that XRT short sellers are paying dividends to XRT holders instead. However, when the dividend is paid by the short seller, the tax on the dividend that the holder gets is much higher than normal. Apparently, the XRT ETF does not want to force its shareholders to pay huge tax amounts. So, to satisfy their investors, there are chances that they will compel short sellers to cover before dividends are paid. The dividend is scheduled to be paid once again on the same day that the catalyst compelling hedge funds to purchase a huge amount of XRT shares. Since a large part of XRT is comprised of GME, this helps shove GME's price up. The fourth indication that this catalyst has great potential is that on the day of the catalyst, there is an extraordinary number of options expiring. There are almost 20,000 GME call options with a strike price of $100 expiring on this day. If followed, it would instantly build a demand for another 2 million shares. This does not only show that there are high chances of GME hitting $800, but also indicates that if GME surpasses $100 before this date, there's likely to be a huge gamma squeeze, making the price surge even higher. If hedge funds have not yet been compelled to cover before $100, I believe that the short squeeze will need to trigger with the gamma squeeze, and the incredible momentum will mostly happen after the $800 mark. However, apart from the unusual options activity in GME, other stocks that don't have anything to do with GME are also affected. There are a lot of put options in several big stocks on the day of the catalyst. A few examples are Facebook, Apple, Starbucks, and Coca-Cola. This could be an unbelievable coincidence, or it could mean that the hedge funds are getting ready to sell other stocks to cover their short positions in GME. If all hedge funds happen to sell off a huge amount of stocks simultaneously, those will drop in price. So, one possible verdict is that institutions are getting ready for the GME short squeeze to lead up to a drop or crash in the whole stock market on the day of our catalyst. The fifth part of the catalyst is the fourth quarter earnings of Gamestop. Now, the fourth quarter earnings are not released until 4 business days after the day of our catalyst. In my opinion, this is a good thing. The fourth quarter is something that many people have looked forward to, and several people are looking for good news. This way, the report for the fourth quarter earnings turns out to be just another reason to purchase GME. This contributes to the hype that has been created around the catalyst date. Irrespective of what the report actually indicates, people might purchase prior to the release of the report so that they don't miss out on good news. At the same time, if the outcomes are disappointing, it won't affect the catalyst since the release is 4 business days later. The sixth reason for this catalyst to be very strong once again has to do with options. To comprehend this, we have to consider what was happening in GME before all this hype was created. A few months ago, GME was in a position where it had crashed almost 96% from its all-time high. With the pandemic's negative impact and sales of games online, the GMW share price at a point was under $3. During this, the hedge funds were certain the company was going bankrupt soon. Most of us are aware that they occupied huge short positions. However, besides short selling, another way to gain from an organization's going bankrupt is to write and sell call options for the stock. If you're certain that the share price cannot go up again, it's a safe bet to sell call options. The theory here is that many hedge funds sold call options for GME nakedly. This implies that they didn't own the shares through which they sold the call options. Market makers are generally careful and avoid the risk of selling call options by owning some of the fundamental assets. If the call option is considered that way, they can avoid being compelled to purchase a bunch of shares at a very high price. However, as per theory, hedge funds overlook the risk, which means that future gamma squeezes could be stronger than what we assume because of hedge funds being compelled to purchase back more shares than what is normally expected when call options expire in the money. The seventh and final reason in support of the catalyst is the second congressional hearing happening. This will take place 2 days prior to the big catalyst. The first hearing gave a ton of publicity to GME once again. Just a few days afterwards, there was a big surge to $200. We are hoping that the second hearing will fetch the same kind of attention to GME and again get a huge price surge in short order. All of these together might be a catalyst that is adequately strong to finally trigger the short squeeze. The date of the catalyst is the 19th of March. Before signing off, I have one important thing to say. That is, in spite of this catalyst, the specified date is not a make-it-or-break-it point. If I had to guess when the short squeeze would happen, I would say it would be around March 19th. I'm waiting for this exciting day. Even if the short squeeze does not happen on this date, it doesn't actually change anything. The original facets of the entire short squeeze are still there. If holders hold, short positions gradually have to be covered. No one can say for sure whether the short squeeze will happen on March 19th or anywhere around that day or even tomorrow. The only certain thing is that many people, including myself, favor this stock. So guys, that's it for today. I hope you found this information useful. Share your questions, if any, in the comments section below. Thanks a lot for watching, and don't forget to like the video and subscribe to the channel if you find the information useful.